Welcome, everyone, my dear friends. This is Jimmy, your favorite NLP coach. The market has been really brutal the last few days, actually, since November, to be honest. But especially since a few days ago, we broke a really major support. It was actually support, a high time frame support. Bulls have been able to defend this support level for 525 days. And the well the inevitable happened, and that's the reality of now. And this breakdown has caused a lot of stress and anxiety in the market and in our brains and in our mind. And this makes us really suggestible to make a lot of mistakes. And it's my aim, it's my wish, it's my goal to help you guys to not make the mistakes I have made back in 2017 and 18. For those who don't know me, my name is Jimmy. I'm a NLP coach. NLP stands for Neuro Linguistic Programming. In fact, I'm a NLP master coach. I have a background in psychology as well, in the positive psychology. I have also a background in HR. I worked in HR for a long time. Because I worked in HR, because I dealt with a lot of people, I was inspired to dive more into NLP and psychology. So that's why I am doing what I'm doing. It's because I love to help people, and it's my aim to help you guys. So, the mistakes you want to avoid. Well, there are a lot of mistakes you want to avoid, and I want to address all of them. And I want to keep this live stream short, 30 minutes, maybe 35 minutes, including Q&A. If there are any questions, please do let me know. If you already have questions now, please do let me know. I'm here available to your service. So let me know if you guys have any questions. So first, as always, I have some ground rules. I always emphasize them. One, this is your safe space. If you made a mistake, and I don't care if this is a stupid mistake or not, share it here, right, with me. You now have someone available who can talk you through stuff. Two, respect others. Otherwise, I'm going to kick you out of this live stream. Three, by the way, I've never kicked out someone from a live stream, so there are actually zero chances that I'm gonna kick you out from the live stream. Three, maybe the most important one, please carefully listen, take action. If you're just listening to me, and if you're just listening for the sake of listening, just end this live stream for yourself and do something else, because it's not going to help you. Because knowing and doing is not the same. We know this. 50% of success is by participating in something, right? By showing up. That's 50% of success. The remaining is by taking action and being proactive. Because knowing and doing is not the same. Eventually, you need to do. It's also what I often say in the Bird Nest to our subscribers. We facilitate, we give you guidelines, we also give calls, we give you everything that we have available to help you guys, but you need to do the work yourself. It's like just like the gym. You can take a subscription, you pay, let's say, $50, $100. Not sure what you guys are paying now for a fitness subscription. I just you know I recently subscribed. I pay around $50 a month. But if I have a subscription and I don't do anything with it and I don't take the time to go to the gym, I will have zero gains. The same with trading. You need to take action. I cannot emphasize this enough. Okay, guys, let's continue. First, there's a lot of fear, without any doubt. There's a lot of fear in the market. I often check the fear and greed index. I know you shouldn't use this in isolation, right? You shouldn't use this in isolation, but it reflects the sentiment of the market. I mean, for the same purpose, you could use another overbought, oversold indicator, oscillator, or you could use, for example, the RSI. It also reflects actually the sentiment of the current market conditions. So there's a lot of fear. So what happens when there's a lot of fear? Well, basically, a lot of people, they want to be a part of the same trend, which is the downtrend. People, they want to liquidate their positions. That's actually the phase we're in right now. There's a lot of fear. There's extreme fear, extreme fear. Um, and fear is actually not your friend. It's a real thing. I normally say that fear is actually more nurtured than natured, meaning like we basically have three types of fear that are, let's say, natured. It's the fear of rejection, the fear of falling, and the fear of loud noises. Loud noises. And most of the other fear, it's actually learned through your lives. But what we should know from fear is, and I will explain this more in depth, where fear is coming from as in, from your brain, and how it affects your body, and how your body affects your mind again. But just keep in mind that you're not the only one. So there's fear across all the markets, stocks, legacy market, crypto, everywhere. And that's why you should, on a regular basis, ask yourself actually two questions. That's one: where am I when it comes to my trading performance in your own personal cycle, right? There is a psychology of a Bitcoin cycle, but there's also something like a psychology of me cycle. Ask yourself, where am I? Where am I? Like, for example, I wake up and ask myself, where am I check my P&L, I check the market, I check my current trading performance, and ask myself, where am I? Am I in a state of euphoria, hope, denial, anger, panic? Is it disbelief? Do I feel depressed? And then ask yourself, where's the market? Of course, if you trade crypto, you could use Bitcoin as a benchmark. And then ask yourself, what's the difference? What's the bit difference between my own trading performance and Bitcoin? Are they in sync? I hope not for you at the moment. If they are not in sync, then you're more likely to be more objective, because there's something we're missing now in this current market condition, and that's being objective and rational, because the emotions have taken over our decision making process. And I will explain this more in depth. And let me quickly check the questions we have. um Look, yeah, I think it's okay to feel fear. I mean, we are wired in such a way to feel fear. It's because we have amygdala and well, in popular science, they will call it your emotional brain. But I can say for a fact that you're wired in such a way to feel and experience fear. It's like fighting this fear is not a good idea. I never suggest that. Fight your emotions. I think it's stupid, because you're wired in such a way to feel these emotions um, and these feelings. What I strongly advise and suggest is to take the time to process them in such a way that they become more regular, that you can make them, that you can regulate them. Making decisions upon unprocessed emotions uh, will screw you up. So a few facts, maybe also like a fun quiz. In these 3 4 points, two of them were actually NLP presuppositions. Let me know if you know which of them are NLP presuppositions. First, I want to say, without a vision, we perish. Look, if you try to buy the dip without a vision, I mean, you're not gonna make it. You need to have a plan. Without a plan, you're nowhere. Two, and this is a NLP presupposition. There's no failure. There's only feedback, and I truly believe this. There's no failure and only feedback. I also believe that average actions lead to average outcome, and the average outcome actually is that most people actually lose money. So if you do the average stuff, like using the RSI as how the average would use the RSI, you will have average outcome. You don't want that. You want to accelerate, and be different from others. So you need to know your edge. Four, and this is a NLP presupposition: all behavior, even the most awful or bizarre one, has positive intention. In trading context, revenge trading has actually a positive intention. Not using risk management, also. Revenge trading, also. You need to understand this. The behavior itself is bad, the intention behind it is good, and there needs to be a clear distinguish between those two: your intention and your behavior. You change your behavior by changing the intention. I will talk more about that in a few seconds. First, about your vision, guys. I truly believe if you don't have a vision, you don't have clarity. If you don't have clarity, you don't have power. It's simple as that. So work on that first. If we are in a bear market, we know this. With no doubt, there is a bear market. So what are you going to do in a bear market? Just like buy the dip randomly? I I would say that that's not a good strategy. So there needs to be strategy behind your actions. For example, my strategy was like just laddering in on key levels. 24K was a level. 20K is a level where I'm happy to skill in. 70K is a level. 40K, if we come there, is also a level where I would love to skill in for the long term. This is not trading. This is investing. And for trading, I also have a strategy I am going to execute. So I have target like bits layered everywhere, and this aligns with my risk profile. And I think you should have the same. Um, so I know there's a lot of salt in the market, and people they blame, and this often happens when people are losing money. They playing the blame game. Rule number one is we are fully responsible for our own actions. What happens is when we trading and we enter a bear market or there's a breakdown, is people they tend to be more risk loving, so they seek more risk, and this is mainly caused by loss aversion. I think we have a clown in the chat. Can you talk about Litecoin? Well, I can't talk about Litecoin, but now we're talking about trading psychology. If you don't like this topic, I would say you could leave the chat. So what happens is when people are losing money, people they don't like to lose money, and there's this law of a loss aversion bias, meaning the feeling, the emotional load, the mentally and from mentally we experience a loss up to three times more than a win. And this is a reality. We don't like to lose. So when we are losing, we tend to take more risk, which could manifest in revenge trading, leverage trading, not using risk management, or deviating from your normal trading rules and principles. And this is the danger. And this is the one thing you really should avoid at this current moment. So try to become actually the opposite, because when things are going well and you manage to grow your account, people they become more conservative. So when there's a lot of profit, we tend to be more conservative, meaning we lower our position size, we take this more seriously because there's more in stake. So I want to give you a scenario, and that's, let's say I have, and I would love you guys to pay attention, is there's coin A, and coin A is $5,000 in profit. That's nice. But there's also another coin I possess, and that's coin X, and X is 2K in loss. So you guys tell me, what does the average do? Imagine this is you. What would you do? what you guys would do. I would tell you what the average would have done, and that's not cutting the losses and keeping the paper wins. That's what the average would do. Because losing, like cutting the loss of 2K, and I just explained that mentally we experience a loss 2 up to 3 times more than a win. So basically, um, you're cutting here a loss of 4K, 6K mentally, okay, because of the loss aversion bias. So we hope that this loss will compensate over time, and we take profit on the winning trade. That's actually what the average does. However, rule number one when it comes to trading is capital preservation. What you actually want to do is to cut the losses and let your winners run, or putting a stop loss, or moving the stop loss of your winning trade. But most of the people, they do actually the opposite because they cannot stomach accepting a loss. Indeed, really, really, really good. I think we have really bright people here in the chat. They hold on to the coin at the loss. You're losing trades and investments you want to cut. And if there's no strategy behind it, no dollar cost averaging strategy behind it, cut your losses. It's simple as that. Well, maybe it's easy said, but it's maybe not simple. But it's the best thing you could do in a market that goes down. So preserve your capital. Rule number one. So now we come actually to the topic of your brain. You all of you guys, you have a beautiful brain, and there's no such thing as a dumb brain or a smart brain. It's just like a trained brain and an untrained brain. And there's like one little tiny thing, and that's your amygdala, and it basically regulates your emotions. You have two of them on each side of your brain, your left brain and your right brain. Both of them, they have amygdala. Your amygdala is responsible for the fight, flight, freeze response. So if this gets activated, then like you could be in a mode, like in the state of fighting, or you flight, you want to avoid things, or you freeze. Freezing is not good. Fighting is also not good. Like fleeing away from this turmoil is also not good. If your amygdala gets activated, this causes a lot of bodily changes. Your pupil can dilate, um, your heartbeat can increase, you maybe breathe more shallow. You can, it's easy then for your body to stick in a state of frustration and stress. And if this happens, this can affect your forebrain, your frontal lobe. Well, actually, frontal lobe and frontal cortex maybe not the same thing, but what we do know is that your thinking brain is actually located in your forebrain. And if you're in a state of stress, you cannot think clearly. There are even studies conducted that if you're in a state of stress for a long time, your forebrain can even shrink. It makes you literally dumber. This is not a joke. This is true. So I would say your goal is to rebalance actually your mindset, because there's one thing you need to protect, and that's your mental capital. You have a financial capital, that's true. There's also a mental capital you need to protect. I often say you lose your mental capital, you lose your financial capital. So what happens when people are in a state of stress, they lost a lot of money, they're more what? Risk seeking, more risk loving, and then losing even more money. They will come with stupid justifications like, I already lost a lot of money, so screw it, I'm gonna risk even more to compensate my losses. This leads to even more losses. And if this is you, and if there's a devil like telling you, like this little demon, take more risk, go for more leverage, buy the dip every time, and if there's no strategy behind it, Ignore this voice in your head. We all have this thinking voice. Ignore it, because you're not the voice. You're the one who's taking the action. And these two are two different things. So, what I want you guys to avoid is staying in a state of pain, frustration, and stress, because it will interfere with your decision making process. Trading is all about making decisions. If you making decisions based on stress and emotions, you most likely not are going to make the most rational decision, because it will lead to revenge trading. It will lead to abandoning your trading principles. You will tend more to risk seeking instead of risk averse, and you will apply the hindsight bias, like, okay, I know what happened before, so I know what will happen next. And maybe the most important one is negative language pattern. Negative language pattern. I know for a fact that a lot of people, the language pattern they use internally is not that positive anymore. They blame others, they blame themselves, they call themselves names, like, I'm stupid, I should have done this, I should have took profit there. This is something that happens when we're in a state of stress, anxiety, frustration, depression. And the difficult thing is to get out of this pattern, because a pattern is something that happened multiple times. Why are my concerns so heavy about negative language patterns? Well, it's because of this. If your language pattern is negative and stays negative, and this is your thinking, your subconscious mind basically eavesdropping your talk, your internal talk. And if you tell yourself, I'm stupid, or I'm not a good trader, they always manipulate me, what your subconscious mind is actually doing is it's using these negative language patterns as a command. And it will try its best to help you to maintain this self-image you have created for yourself. And that's the danger of negative language pattern. If this is you, write down the negative language patterns and challenge them. For example, if you think like, I'm really bad in risk management or taking profit, change them and reframe them. For example, I'm in progress of taking profit, for example, and then take action. One of the tips I recently gave to one of my private mentoring students is, if you have problems with taking profit, and let's say you have a big bag of, let's say, Cardano, okay, it's like a coin which is cheap per unit, or low price in unit, and then just sell every day one Cardano or two Cardano every day for a week long, just to accustom your body and your mind with selling or taking profit. So these are actually the things you need to avoid. And there are some tips, and there's also a process how to handle losses in an effective way. So my tip number one is, write down your trading plan. Please, people, you are as good as you write. If you don't have any trading plan, well, you will be left with randomness. And if you are left with randomness in a market that is that's full with randomness, then you're not going to make it. Like, have a training plan, write it down on a piece of paper. That's even better. Visualize your trading process. You need to understand your process, and you need to learn how you can detach yourself from your P&L. So the problem now is, people are most people I know, I've coached, they're using basically their P&L as where they should level their own self-image. So high P&L is high self-image. Low P&L means actually low self-image. Your self-image, your self-esteem should be totally disconnected from your P&L. P&L, profit and loss. And the reason why is, You don't want something that's outside of yourself determining your self-worth, your self-esteem, your self-image. You don't have any control of your P&L. That's the reality. There's a lot of randomness in the market. You don't have any control of your P&L. So don't let something you don't have control over determine your self-image. That's something you should avoid. A tip I also want to give you guys is find your trading methodology. Try to find your edge. I'm a big fan, for example, of RSI, and I'm sure I'm using RSI way differently than most people use. Um, and like find this like one oscillator, indicator, or tool that you can embed in trading strategies. Like have an edge, and especially nowadays, there's a lot of cloud chasing on social media. Reduce your social media time, and a tip, and I think this one we can talk about this more in depth is look, there is like a healthy process handling losses. The first one, it sounds maybe a little bit strange, is self-compassion. If you lost money, or like if you lost a lot of money or all of your money, I know this hurts and it's not fun, but you should be if you want to recover, like you should understand a few things. One, you should practice some form of self-compassion and don't beat yourself up. Treat yourself as a one of your best friends. I mean, what would you say to or tell to one of your best friends if he made a mistake or he lost money? You're dumb, you're a loser? Of course not. But try to comfort him. So try to comfort yourself and practice self-compassion. Two, understand the emotions that are, you know, understand your emotions. What is it what you feel because of this breakdown? Is it disbelief? Is it sadness? Are you angry? Is it frustration? What is it? Label it. You are as good as you write. So write them down. If you have done these two steps, and then you can continue with the rest of the model, that's accepting the reality of a loss. And take your time for this. Don't only do this by lip service, but genuinely accept the loss. And then you can go on and give yourself permission to feel these feelings and then share it with others. And I think it's important to share this with others. So have a tribe, have friends you can share this with. Um, have a trading buddy. I mean, how many of you guys have a trading buddy? Let me know in the chat. How many of you guys have a trading buddy? And I think all of you guys should have a trading buddy. Maybe people inside the burp nest have a trading buddy. People who are not part of the burp nest have a trading buddy, like a serious trading buddy. Have a call once in a month, once in the 2 weeks, and talk with him or her about your trading performance, your mistakes, your process. I mean, if you take this seriously, you need to do serious stuff. I mean, the community is big. Like Claire, for example, says, I don't have a trading buddy. Okay, but if you want to have a training buddy, take action. Like maybe people in your own environment, or maybe you're part of a group, a training group. Ask there who wants to become a training buddy, or approach people you admire because of their training performance or the training style, and ask them, can we become training buddies? Another thing is, and I think especially men, we males, we are not really good in this. It's sharing the feelings with others. I mean, if you're in a state of, if you're really in a state of disbelief or sadness, share this with someone, and then learn from your losses. Why learning from your losses is the last part of the thing? You cannot learn if you're in a state of pain and frustration. A lot of people tried this, including myself, back in 2017. You cannot learn, you cannot think logically if there are a lot of unprocessed emotions. You need to complete first the other steps, like accepting the reality, self-compassion. Don't beat yourself up. Give yourself permission to feel. Like we are wired in such a way to feel these emotions, share it with others, and then learn from your losses. And don't start with learning from losses immediately, because that's what most people do. And then you can continue. Well, maybe I see a match. By the way, Melvin, I've been mentioning to a friend that I need one, right? Well, Claire doesn't have a trading buddy. Maybe some other, share your Twitter handles or approach each other and try to, to find your trading buddy. I have a trading buddy myself, and it helps me, to stay balanced and grounded. And then again, always ask yourself, where am I when it comes to P&L, and where's the market? What's the difference? What's the difference? Okay, guys, I try to keep this short. For those who are not part of the Burp Nest, you could try us out. There's a free trial. It's 7 days, free of charge. We don't need anything. We don't need credit card or address or anything else. Just an email address, and then you can try it out. You can try us out. There are a few things you should commit yourself to, especially when you lost money. I lost money, by the way. So I am USDT, but I also have a altcoin position. It's one, self-compassion. Detach yourself from screens. Don't let your P&L determine your self-worth, because that's not a smart thing to do. Accept your losses, not just by lip service. Become better in regulating emotions and journal, and shift your focus from P&L to the process. I think it's good to have some clear outcome goals, as in, I want to achieve this amount of money, or I want to grow my account from 10K to 12K at the end of the year. I think it's good. But the real magic happens is if you have process goals. All of you guys need to have process goals. If you have a process goal, then it's easier to stick to the goal and to the process, because the process is something you can control. For example, entering a trade if this and this happens. For example, what I normally use is when price is at support, there's bullish divergence, and that's often for me an entry trigger, and I just go for it. If the market is really tough and difficult, and it's for me difficult to read the market, but I do see a good setup, I know that I need to reduce my position size from 2% risk per trade to maybe 1% or 0.5% risk per trade. This is something I can control. I cannot control the outcome of each individual trade, never ever. But you can control your process goals. Thank you, Andre, also for being honest. You need a trading buddy. I think we all need a trading buddy. Like, people are used to live in tribes. And I think it's really good to have someone you can talk with. Preferably someone from your own country who can speak in your own native language. That would be the best of the best. Also, someone who knows what trading is. I think it will help you a lot. If you don't have one, just approach people yourself. I mean, I'm sure you know some people maybe who your followers, or someone who you follow on Twitter or Discord, or someone else. Just go for it. It's you who's going to take the action, right? I mean, it's like the gym, right? Like, there's a gym, it facilitates, right? You have all these equipments. If you do nothing, nothing will happen. So just take the action. By the way, guys, I'm not Burp. I know we are streaming also on Burp's Twitter. This is Jimie. And I'm responsible for trading psychology within the Burp Nest. So we basically, in the Burp Nest, we approach the market through different angles, right? It's FA, it's TA, it's on chain analytics, and it's of course trading psychology. So this was a typical trading psychology course with me. I hope you guys enjoyed this one. If you have any questions, please do let me know. There's a smart guy saying here, I need to reduce my size, position size. I think it's a smart way to do. Look, what happened also now with this breakdown is um, it damaged maybe your self-confidence. Okay. And I often say confidence comes with competence. If you do believe that you have the competence, but something happened with your confidence, but you see a trade setup that aligns with your strategy, just execute, I would say, but lower your position size. I mean, there's nothing wrong with lowering your position size, even if it is 0.1%. It doesn't matter, because if lack of confidence holds you away from good trades, I don't think that's a good thing. To regain that confidence, just execute and lower your risk. Um, Maybe for some people it's too extreme, but just open a position of $100 or $10 or $20 or even $5. If you lose the trade, like, and apply risk management, okay? Just don't gamble that $5 with it. Use risk management. If it is $100, you have 2% risk per trade. If it goes against you, you lose $2. I mean, would that make you feel really sad? Maybe a little bit, but it will help you to regain your confidence. Um, some other questions, guys? Let me know. If you guys don't have any questions, then I will bring the kids to bed. They're pretty tired right now. Let me check the chats. By the way, Melvin, just like approach that friend again and say, hey, what about we become a trading buddies? I think DCA strategy is a good strategy. I apply this myself, but have a strategy behind it. So I would say what I normally would have done, or what I'm doing, is I mark like the high key levels. For me, it was back at 28K, it was 24K, it was 20K, 70K, 17, 17, and 13K. And I'm completely okay to layer bits there. Okay, guys, thank you very much for joining this live stream with me. You guys know me where to find me, right? I'm on Twitter. I'm your NLP coach. You can follow the Bird Nest. We publish every day free Bitcoin reports. They're completely free, because there's like a free section of our Bird Nest. You can read it every day and ask yourself, what are the actions I'm going to take? As I said, listening to me is not enough. You need to take action. I hope this helped a lot, and talk soon, guys. Bye bye.